Another Tracking Trends Thursday. Today is Thursday, June 19th. Happy Juneteenth to everyone celebrating that. It is also my brother's birthday. Happy birthday to my brother, Rick. And in case you don't know what Juneteenth is, it is actually, as I understand it, if I understand it correctly, hopefully I do, it is when the last slaves learned that they were free. So even though there was emancipation sooner than June 19th, not everyone got the news. Not all of the slaves got the news that they were freed. So it was actually June 19th, some year, a long time ago, that that people actually, apparently most of the people at that point knew that they were in fact free. That is why Juneteenth is celebrated. So today, let's talk about what's happening in real estate, though. We are working, so realtors often work even on holidays because that's when other people are not working and are looking at homes and want to know what's happening in real estate. So me and my team are working today. Current interest rate did dip a little bit. So a 4-week low, we've been relatively stable for a long time. So not a lot of movement, but we're looking at 6.81 when the monthly average is 6.85. That is higher than the yearly average that we've been seeing. So, but nice to see a little bit of movement downward in the right direction anyway, in terms of what buyers are hoping for on interest rates. In terms of the economy, the reason why we look at the economy is because what's happening in the economy does impact what's happening with interest rates. Oh, by the way, the Fed is meeting this week, probably as we speak. I meant to look that up before I jumped on here, but I didn't. So by next week, we'll have news in terms of what the Fed did at their meeting. The expectation and what I'm seeing here is that they were not going to move the Fed rate. So it would be a surprise if they did. Again, what they're watching for and why we look at the economy is because if the economy is getting worse, then that gives them reason to lower interest rates in order to stimulate the economy. If the economy is doing okay, then they tend to not lower interest rates. They would either keep them where they are or in fact increase them. So that's why we look at what's happening in the economy. So inflation remained mild in May. Economists do expect price pressures to grow later as things begin to fall out with tariffs, as I understand, right? I mean, we don't know exactly what's going on there, but I think that the expectation of prices to be going up later. But currently, inflation is mild. And wholesale inflation also showed little signs of increasing despite concerns about tariffs. So again, the Fed is what I've heard is that they're planning to watch and see what happens, since again, we just have not a lot of certainty in terms of our administration, in terms of maintaining stability, and we just never know what they're going to do in the administration. So mortgage demand rose to its highest level in over a month. So that's good news for sellers. Purchase applications were up 10% for the week and 20% higher than a year ago. And then this is really important here. The housing market faces a record imbalance. I've been talking about this for a while, the increase in inventory and some decrease in demand. So with almost 500,000 more sellers than buyers as of April 2025. So we're starting to see that imbalance, that shift towards more of a buyer's market when the inventory, the supply is higher than demand. We're starting to see that and experience that. In the Mid-Atlantic region, showings have increased. So this may correlate in terms of there's more homes to look at, so there's more buyers out there. So again, we need more buyers, we need more showings in order to eat up more inventory. So a 9.7% increase over the same week last year. And for the 4th week in a row, that showings have exceeded what they were last year. So showings being up, again, may correlate to inventory being up. And then the next bullet point here is inventory continues its upward trajectory. So we're continuing to see inventory rise. Contract times remain slower than 2024. So things taking longer to sell. is a trend that we've continued to see as well in the Mid-Atlantic region, as well as the DC metro area. So in the larger DC metro area here, year over year, most things are up, and week over week, most things are down. And so that does make sense because we are in the summer now. And so in the summer months, our market does tend to slow down. Activity tends to decrease overall. So week over week, that makes sense. And good to see that we're still up in a lot of ways year over year. So showings are up 1.2%. So it's not a lot again, and that may be because there's more homes to show. Purchase contracts are up 2.4%, not a big number. Time to contract, 7 days, that is a big number. So 28 days median time to contract. That is a long time for our area. Buyers have generally more time to make a decision these days. New listings are up 9.5% year over year, and active listings up 44%. List price is still up 6.5% year over year. I've been saying we might start to see that number come down, but as of right now, remember, listing price is different than sold price. So we should probably start looking at sold prices to see if those sold prices are coming up or down year over year. So I might add that in here for you. Week over week, showings are down week over week. It's the summer months. People are taking vacation. Kids got out of school. A lot of people are away. So I would expect to see less activity in general this time of year. Purchase contracts are basically flat. Time to contract shorter by only 1 day, week over week. New listings are down, as well as active listings basically flat. And median list price is down week over week by about 2%. That's the larger DC metro area. In our hyper-local area of Arlington, Alexandria, Fairfax, and Falls Church, this is the raw data. So you can see new listings and new under contracts week over week from the beginning of the year. They've increased up until the end of, and this is we kind of peaked out here end of April, beginning of May in terms of contracts. That kind of seems to be our high point here, and then we're starting to see things come down. So both listings and under contracts, pending contracts, we're starting to see a downward trajectory, which we would normally see in the summer months. That's normal. This is just the total number. I need to probably pull that out of the chart. And then this is our average for 2025. So we're a little bit better than average right now. And this is the raw data, the raw weekly hyper-local data. So I've got some more charts to share with you, but year over year, the numbers are so small, they're hard to see on the chart. So year over year, inventory is up by 13%. And contracts are essentially flat. You can see 0.51% there. Average days on market 22, and interest rates again down a bit. So here is the year over year data, as well as the demand to supply ratio. So when you look at this week, our so our supply is up year over year. Our contracts are basically flat, a little tiny green bar right there. And then demand to supply ratio is on par with what it's been in the 80s. Let me double check, right? Yeah, 83%. So that tells you, approximately 27% of the inventory is left over after you account for new contracts, which will, we'll continue to see more inventory if not all of the inventory is eaten up. So nothing of huge concern there. And this shows you, what has been stable is interest rates, so a small enough change in interest rates that really didn't show up on our chart here. And days on market has fluctuated some. We're at 22 in our hyperlocal market, average days on market. So up a bit from last week. That is your weekly market report. For this past week, the data we ran up through Wednesday, I think we're running it through, or Tuesday. So you run it from Wednesday to Tuesday is where we run our data. And if you ever want to have conversations about what is happening and how it impacts you directly, please reach out. You can call me or text me at 571-210-1866. You can email me at kristen@homesbymason.com or get on my calendar using the link down below in YouTube or Facebook, wherever you're watching this, or in the email. All of those places have a link down below to get on my calendar. thanks for watching. Enjoy the rest of the day and have a great weekend.